Back on Morning Mover, shares of Netflix are lower this morning, but Evercore ISI still positive on the streaming giant. After its quarterly U.S. and annual Japan survey, the firm tells investors the results tilt positive for Netflix. Evercore ISI still views the company as having one of the internet sector's strongest management teams with an extremely strong and growing value proposition. The firm kept its outperform rating and an $1,100 price target on Netflix. At that time now for Options Corner. Joining us to take a deeper look at Netflix, we've got Tom White, co-host of Fast Market. All right, Tom. So Netflix has actually had a good year. I didn't catch that. It's been outperforming the broader market. So talk to us about the trends you're seeing when it comes to Netflix's chart.
Yeah, Diane. Well, it was probably based on their earnings report in early January, which was really good, explosive subscriber numbers in there as they kind of rolled out live sports towards the end of the year with the Christmas Day games. But I wanted to give you a look on a chart here that's more broad-based, right? From 3 years ago, this is a 3-year, 1-week chart. The stock's up basically 400%, over 400% from those levels that we saw just 3 years ago. It was below $200 a share at that point. So we've seen a real big resurgence in these shares. Now, you mentioned that the stock's up this year. Well, maybe it's being used as a safety play because who wants to give up their Netflix subscription when they're sitting at home and not out spending money at this point? But I got another chart here. It's going to be a 1 year, 1 day. It's going to be a little bit more granular and show the volatility that we've had in there since that spike to all-time highs that we saw earlier this year. Pulled back here a little bit in the last couple of months, but that's probably reflective of the overall market at this point. Stock is now below its 50-day moving average. It had a really big red candle on Friday here where we fell below the 967 level, which is a 50-day moving average. That has been acting as support, but it's been choppy recently. So in the near term, probably expect more volatility. They report earnings on the 17th of April. That might be a catalyst. But remember, they're not giving us subscriber numbers moving forward.
I know, no subscriber numbers. That was once going to be an adjustment. So how would you approach an example trade for Netflix, especially in the face of earnings coming up?
Well, I looked at it this way. That implied volatility levels, the IV percentile ranks about 91%. So we're in the top 10 of implied volatility levels that we've seen over the last 52 weeks in Netflix. So that gives you some opportunities to maybe sell strategies based on what your directional bias is to take advantage of the higher option premium or extrinsic option value at this point. So I looked at a strategy that's, if you look at it in a baseball analogy, I'm trying to hit a single, I'm trying to hit a double. I'm not swinging for the fences. This is a don't be a hero type of strategy, taking advantage of higher implied volatility. So going out to that April monthly cycle that expires on the day that they report earnings on the 17th, we're going to sell an out-of-the-money put vertical in Netflix in that option series. We're going to sell the 860 strike put, and then against it, because I need to stay risk-defined because of earnings, because of the movements that we've seen in the overall market, we're going to buy the 840 puts. So sell the 860 put, buy the 840 puts, short $20 wide, neutral to bullish put vertical, where I'm going to collect, if the stock opens up right here about 922, I'm going to collect about a $5 premium on this particular trade. That's what you can make, $500 per spread on it. And you can see here from the risk profile, it takes my break even all the way down to 855. That's going to be about 7% below the current share price, which is about 922 if we open up at that location. So you're giving yourself that big cushion to the downside on this one. Probability of that short 860 strike finishing out of the money, which is what you want, right? You want this thing to expire and go out worthless, right? And you just get to keep the $500. Probability of finishing out of the money on that 860 strike is going to be over 70%. So you're giving yourself that higher probability of success on this one where, hey, if the stock goes up, stock stays where it is, or stock goes lower but remains above 855, you can remain profitable on this one. Positive time decay on this trade also, but that 7% cushion, I think, is key. You do have $1,500 in risk on this trade, but at the same time, the probability of success is a lot higher.
I do like that probability of success. That sounds good. Even though you said this is a don't be a hero example trade, there's a high probability of success there and aiming for a single or doubles here. I like that. All right, let's look at Netflix shares under some pressure in the pre-market, but certainly it's had a strong run year to date. That was an example trade on Netflix for us.